Senor Ortiz, we're here for another week, man. Are you ready to kick it off?
Man, let's do this.
Let's do it. What to do, KTTV? This is KT, and we are here for another episode of the Administrators Podcast. I am your host. Oh, I just said that. KT, you with my co-host.
JoJo, baby.
Hey.
JoJo.
Look, man. How are we living in this tariff-driven, retaliatory, all of these things that's going on, man? How you feeling, brother?
You know what? I'm mixed right now. You know, I feel like, we don't know how long this is going to be. I also feel like it was a long time coming. It could have been anybody in office doing whatever they wanted to do. But as far as, with the market being so up for probably since COVID took it out, it definitely needed some type of correction. And so we are definitely headed, if not there already, into like a bear market at minimum. Hopefully we don't continue into a recession. But I think some of my thinking has changed. I still am optimistic about buying the dip, shooting for long term. But I think now, because it is uncertain, you either, just want to hold your money or you're going to want to play some puts. So we'll talk about that today.
Yeah, man. I agree with you, man. It is a crazy time. You almost say, is the brother trying to crash it just so he can build it back up, and say, hey, look, I brought it back, y'all. But like, bro, you get it, bro. You know what I'm saying? So it's like, whoa. But I really feel like we are still in some crazy times. Yeah, man. I will say this is definitely the time, as we'll go through the heat check tonight to look at the numbers. This is definitely the time to start nibbling on those positions, because these stocks, you may not see these lows for another few years. Like this happens maybe once every 2 years, once every 4 years. And so these are the lowest that things have been since 2020. So you think 5-6 years, here we are, 2025, lowest we've been since 2020. We may not see this again until 2030. So start building out those positions, and we'll talk a little bit about that tonight, but that's definitely where we're living at, definitely the time we're in. For the schoolhouse, we are on the home slide. It is start time in the city. Woo! I think we got this, brother. I think we got this, man. So we high school, we testing, I think Monday. Y'all testing elementary?
On Wednesday.
On Wednesday.
Yeah.
Woo! Y'all already had the parades, everything happened.
Man, we had Toro, at our school.
Man.
So, we're good to go. We have one more bigger pep rally on, before the math one. But as far as good to go right now, we had our pep rally, we had Toro, we had some competitions. We're good to go. Hopefully we can knock this test out this Wednesday.
Hey, look, man. A day in time. Good luck, brother. Good luck. All right, man. Things are crazy out here. I guess let's get this show jumping. Let's get into some news. All right, y'all. As you know, we think about what makes stocks go down, right? And so it's either changes in the world, news that may push it down, crashes or hacks, all of these things. And some of those pieces around us are very important, and which is why you have to stay abreast of what's going on. So if you've been living under a rock and you did know that the tariffs did come out, what was that, April 2nd? Yeah, so April 2nd. And so then, China, we've been going back and forth with China. And so in today's news, we're talking about pretty much what happened that made the Dow tumble to one of the worst places ever. Let me jump into this news real quick. So big shouts out to Wall Street Journal for this. The Dow tumbles, the bonds rally after China retaliates against Trump tariffs. So the global tariff rout deepened Friday with the NASDAQ dropping as much as 5% after China's decision to match U.S. duties. Escalated the worst trade war in decades. In decades, China's decision to apply 34% levies on all imported goods from the U.S. next Thursday, after President Trump's tariffs go into effect, rattled markets in part because it further deflated hopes on Wall Street that global settlement could be reached soon. So we already know, just from being up on the game, Thursday is something now that we have to look at, right? So that's just tidbits. This is why we go through this stuff. So now we say, okay, what do I want to do into Thursday? Do I want to like kind of minimize my positions? Do I want to kind of keep everything on the table? But I know Thursday is going to be a hell of a day. That's on our radar. Now, investors are bracing for further conflict, none of which is likely to improve the outlook for global economy or corporate profits. And we know it's earnings season getting ready to pop. The strongest driver of stock prices. JP Morgan analysts on Thursday boosted their odds on the global recession to 60%. Trump remained unbound, saying now is a great time to get rich, and that China played it wrong. They panicked. Man, what you think about this, man?
Well, I don't know what he meant by now's a good time to get rich, but if you got money, you could put it in there and start getting it. But it's I don't know, man. I wish what's crazy though is that when you think about the market itself and you think about what you have in the market, I've been thinking about this, like in reality, in the global scheme of things, it's a small percentage of individuals. It is a lot of companies, a lot of businesses, shareholders from, whoever are with those companies and all that. But the retail investor like us, there's not a lot of them out there. So unless you're looking at your 401ks, your 403bs, your retirements, your IRAs, a lot of people, the direct impact of any of this, we see it, we live it, we know it because we are in the market. And if you have a 401k or any type of retirement that seems to be fluctuating because of this, then you feel it as well. But, as far as those individuals right now who have been, just on the outside looking in, you might want to think about getting into the market now at these lows if you haven't been, thinking about that before, or if you thought that, stuff like that, money, it's too much money to be putting in to certain stocks. And now it definitely is a time, I think, that people can start looking at that to get in. Just like when COVID hit, a lot of things happened when COVID hit. Retail investing became the hot thing, and because people had time and to go into and do it. Now I think one of the things that you'll see that you never saw before, like you said, stock prices are almost relatively affordable compared to where they were, 6 months ago. So
most definitely. Think about getting 10 NVIDIA shares for like $800 or something like that. Come on, man. We knowing that in 5 years from now, one share will probably be worth $800. Now's the time, people. So what we'll do, man, that kind of segues us into the next segment, which is we going to the heat map. So we'll take a quick break, and then when we get back, we'll get into the heat check.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up. You see the drippy, I'm fitted up. Hop in my car and the...
All right, let's go heat check. All right, y'all, in the heat check segment, this is where we kind of talk about 3 of the tools that we use to look at the market. One kind of tells us the market sentiment. One tells us the fear and greed of what's going on out here. And one tells us the volatility that's in these streets. And so the first one we'll go to is our heat map. And this kind of tells us, like I say, what is going on in the overall markets. And as you see, where we got to go right here. As you see, it has been a bloodbath in these streets. I'm going to go right there because 59 has been my load the boat price. So I will just say I'm down with this being green because that's where I'm going to. Oh my God, we got Tarjay at $95. Look, y'all better get this money out here. But other than that, it's terrible out here, brother. Man, it's Eli. Look at Eli. 738. Man, what are we doing out here, man? Nvidia with $94. Microsoft $359. So I'm just looking at all these pieces on sale. Ooh, Berkshire, $493. Man, I remember when this was $240, man. Gonna have to get this Berkshire B. I think I'm gonna start adding to that too, man.
Yeah.
But yeah, so bloodbath. If you don't know how to trade in this market, Tesla with a 10% fall. If you don't know how to trade in this market, just wait, right? Start investing singles. You got Starbucks at $82. We know this stock was $112 a few weeks ago. So, just thinking about things will make their way. Jose, what you got?
I totally agree with that, because I was thinking about, Amazon this week for some reason, and Google. I was thinking about that. I did pick up some Walmart last week, long-term January calls. I think that, a lot of times, like I was telling KT pre-show, I think that I thought about a lot of things happening during COVID. And then as we get into the show, we'll talk about some opportunities for the reverse side of the downside. But I think where in a minute when KT goes over that fear and greed, I think we are in a position where if we got money on the sidelines, man, let's think about how we're going to minimize risk, but still try to maximize our rewards with what we have without spending everything, because you don't know what's about to happen next.
Don't know what's going to happen next. My God, volatility is in the streets. All right, next tool that we use is the fear and greed index. And so, as we know, this all talks about who's willing to spend this money and what's going to happen. And so right now, this is why we're saying you may want to start looking at nibbling and on those positions, right? Somebody asked me what to buy. I say, look, you can go in, you can get you some SMH or XOXL, VTI, QQQ. I told them just buy the ETF. Don't stress it unless you want to just start a position in NVIDIA. But right now, because that's all I'm doing, I'm just digging deeper into these ETFs because I know when it jumps, everything gonna jump, and I'm not trying to catch everything except through burning up the bag on nothing but these ETFs. So right now, and that's for my stock portfolio, we are sitting at a 4, man. Do you hear me, RT?
Say it again.
We are sitting at, hold on, wait a minute. Do you see this share? You see my screen?
Yeah.
Okay. It said it had lost with the screen share. We are sitting at a 1, 2, 3, 4. 4. At this point, we can only get to a 0. Am I saying that will not happen? No, we got Thursday on the table.
Man, look, man, I'm about to take a picture of this. I'm about to take a picture of this 4. Wow. Okay. I'm gonna hold it today.
Yeah, man, because we're gonna want to remember that for next year, man, when we at a 75. Woo. But this is what I'm saying right here. This is where you start nibbling. Because soon, hopefully, we'll get a little bounce to here. But this is where you definitely want to start nibbling. And we can't keep saying it enough, right? This is where you start looking to build those positions. 1 year ago, we were over here, right? And so then you just got to think eventually we'll be here, we'll get back here, and then we'll come back and test because this is not far-fetched after we recover from this. We just don't know what's going to be that one spark, but I guarantee you, once we do get that one little spark, we out of there. Anything else on this fear and greed chart?
That's the lowest I've ever seen it.
Yeah,
at a 4. And you know as well as I know that I bought at higher than that.
Yeah.
So definitely. Now I knew something kind of crazy happened, Friday, but I guess in the grand scheme of everything, when I was looking at it all, because of what positions I do have, the money didn't fluctuate as much as I, thought it would to the downside, just because, I had those longer terms. Now, because of this, we could see a short-term rally. So if you are one of those that want to play the market daily, I think, this could be an opportunity for a little dead cat bounce. I don't know that we ride the wave, but it's interesting though, because, I've been watching a lot of stuff, out there on YouTube and the news and stuff. And, there's definitely some people still saying to buy this dip, and the next couple of days are going to be critical to what you buy, because then, we could see a 1 to 3 week buying patterns. And then again, that can continue for a few months, and then 6 months from now, we could all be looking back at this thinking, damn, man, we missed that opportunity to buy. So,
man, pay attention. I do know when you think about that bounce, I was looking at something today where they were talking about statistics, and there has never been, or the probability is very low for 3 days down in a row. So tomorrow could be a little bounce. I know I had some positions to the downside. I had a bunch of SQQQs and I had some profit in them, and so I did take those, but I did leave my XPXUs to see what's gonna happen. But yeah, just kind of looking to see how we're gonna bounce tomorrow. I will be looking for that trendy. All right. Lastly, for the heat check, we will look at our VIX. And so the volatility index is really just another key measurement of the fear that's in the market and how fearful are people. And so I will show you. Let's see here. The 52-week range for the VIX is 1553 to 4561. The previous close was $30. So we went from $30 all the way to $15. Oh, that VIX makes some money for them. But if we look, people, it's crazy out here, right? We look at the 5-day chart. So 4-2, we're sitting over here 22. This is how crazy the markets has been since the tariff announcement. 4-2 comes the next morning, 4-3, everything jumping, markets open, and it has been crazy ever since, right? So this was your Friday around 240, hit a low, made a little bounce toward the end, but we know could be just short-lived, right? So only thing I can say is we got 1, we got 2. We'll see what happens right here. We'll see what happens. All right, man. Anything on the VIX?
No, man. Just keep an eye on it, y'all.
It's terrible. It's terrible, man. All right, y'all. That will do it for the heat check. What we'll do, we'll take a quick break, and when we come back, we'll do a little bit of the trading with Ortiz.
You see the drip, yeah, I'm fitted up. Hop in my car and get it up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drip, yeah, I'm fitted up. Hop in my car and
Trading with Ortiz. Let's go.
Love the chase and the hunt, and I set the pace when
Look, y'all, we are back. It's crazy out here. We can't keep saying that. Fear and greed index is at 4. Start looking at where you want to put something. I don't care if it's when you get paid, you spend $100 per paycheck. Hell, if you go get TSLL, it's maybe $6. That thing got all the way up to $40 when Tesla was running. All right, y'all, pay attention. Right now, though, Ortiz, man, talk to us. Tell us what you got for us today.
Man, so all right, so we've been talking about the market fluctuating from top to bottom. We've been talking about, how everything has just turned red. You saw the fear and greed, you saw the heat map, so now, we don't want to beat a dead horse, but I want to talk about one of the stocks that KT and I were talking about were for the VIX. We got this UVXY. So it is a VIX play. So as the VIX continues to climb, you can see here that we have definitely gone up. And let's take a look at the 7-day chart, where you can see that, since that April 2nd, it has taken a big time bounce to the top. So indications right now for, your VIX, your UVXY, is that we could see a potential, sell-off coming up. So when you look at the 1 month as well, still pretty much up there. And so we kind of reached a double top here. So we're kind of thinking about, from a technical standpoint, we're at 70 RSI. So that indication could be that we see a bounce in the market, which would indicate a fall in the UVXY. So, but UVXY, now that we know where the market's at right now, we don't know if it's going to stay this way for a long time. We don't know when the bounce back will happen. I think it's time to start thinking about those inverse ETFs that we can get into, whether we want to do calls or whether we want to just buy straight up shares. At $40, you have the luxury to do that. Thinking about where we're at as far as price, definitely UVXY. The other one that's also an inverse, and what I mean by inverse is when the market goes down, these stocks go up. We have a short on the S&P 500. Everybody talks about the SPY and the SPY. Well, let's talk about the SPXU, which is a short on the market right here, 72 RSI, which means we're overbought. So be patient with it. We just, we might reach the double top here too as well. So indication so far from the SPXU and the VIX is that we could see a short-term bounce on the stock market, which means these would fall a little bit. And so, but definitely now that like I said, we see red, let's buy stuff that can benefit us as well. When COVID hit, we waited a little bit, and then we started seeing, okay, this pattern is still to the downside. We're in a downtrend. Let's go ahead and start putting our money into some of these SPXU, UVXY. We might be a little late, but thinking about where we're at and where we're headed, this is a big jump pretty fast, y'all. So could we sustain it to the downside a little bit and then we go back up? So again, the market's going to fluctuate based on any of this news and whatever happens next. So just keep in mind that if we still see plays where the market is still going to be going to the downside, you definitely want to think about SPXU and UVXY. But now let's go ahead and talk about our bread and butter, the SPY. SPY, man, this is it. So look at this drop, man. Look at that drop. We got our 7-day chart right here. Definitely have been in the downtrend over the past 7 days. If we go out to the 1 year, okay, the 1 year, we just passed our double bottom. So we're sitting at 510. 507. We broke through the 510. Now I anticipate that we could do 495, 497. Do we fill this gap to the bottom? I only put RSI on this chart tonight because looking at the MACD is important, but I want everyone to see that this RSI right now is at a 27. Extremely oversold. Well, it's oversold, not extremely yet, because oversold starts at 30. I would definitely start panicking if we start, coming down to 460 or if we hit 410. And when I say panic, I'm thinking, that I might have to really consider any of the positions that I have, even if they expire in the long term, because options are different from stocks. And so when you have that volatility, your IV crush is tremendous no matter how far you are.
Mm.
Let's think about that, thinking about where the SPY is headed. Like I said, we just, we broke through 510. We're sitting at around 505 right now. I do anticipate that we could fill the gap to 496. So that's still another $9 drop. It might, like I said, we are in an area in which we could potentially see a little bounce just because we're oversold, and we did just recently hit that double bottom over here. So maybe this double bottom right here might make us bounce a little bit, but we definitely will look to see about this gap right around this area. So think about, pay attention to the news, pay attention to the stocks. My recommendation right now is, like KT talked about, ETFs. SPY is the market overall growth of the market, and SPXU is the inverse of SPY. And then UVXY goes with our VIX. So those are three that I'm keeping an eye on. KT talked about SQQQ earlier as well. But you can definitely play SPY and QQQ, the NASDAQ, with puts. And so if you're not familiar with puts, though, don't do it. So if you're not really into the calls, to the puts, and to the option game, then just think about sitting on the sideline, because it's for me anyway. It's a little scary playing puts because sometimes the market just likes to bounce, and here you are trying to flush it down some more. Because in your mind, you don't really want to anticipate the market going down because you want it to go up. So just be careful out there, and definitely keep an eye on that SPY.
Hey, that's it, man. Please keep an eye on that SPY, because we never know what's going to happen, because this is tight around this thing, man. All right, so that is it with Trading with Ortiz. Milan, yeah, y'all, it's crazy. I don't know if we can just express that enough, man. It's crazy. So tighten up on your positions, keep your stops tight, and then just keep an eye on that SPY, because it's going to tell you everything. Now, next what we'll do, we'll go into a little platform probing, because I got a little surprise for y'all. We will be right back. All right, y'all, a little platform probing. Let's go. All right, y'all. In today's platform probing, I want to go in and I want to look at this stock. Jose, what you know about that Match Group, man? You know anything about this Match Group, man? Look, y'all, let me go ahead and get this right here. So for the Match Group, I wanted to kind of dig into it. And if you don't know the Match Group Inc. engages in the provision of dating products worldwide. Its portfolio of brands includes Tinder, Match, Meetic, OkCupid, Hinge, Pairs, Plenty of Fish, and Our Time. And so I was looking.
Farmers Only. Well, where's that Farmers Only?
That from Christian Mingle. Hey, look. So the biggest thing about this is, as I always do my research for the show, I kind of look up for different stocks that are selling on a discount. And while I was tempted to go with, hold on, let me put this on do not disturb. Hold up, wait a minute. There we go. Hold up. So while I was tempted to go with AMD because they are selling for 10 cents on a dollar, I'm not going to go with AMD. I'm going to go with this match. So let's kind of look into it. First off, let's dig into the chart. This is what I want to show on the chart. So let's not go 1 minute. Let's go to let's go 1 month chart. And so we can see that, what was this, 1993? We can see that they have been on the incline. And so at one point, the match group was, what is this, man? $179.23. Since then, the match group has gone down, baby. But as we can see right here, we've been at a little stall place. Mm-hmm. So now we at between what's the lowest? 28.74 is our lowest. What a fall from grace. So now let's look under the hood to see what's going on with the match group. Okay, and so all right, I don't know how to get back to my charts, man. How do I get back to my chart, bro? That is crazy. Okay, here we go. Let's go back and look at a little bit more info on match. Overview of the company. So how much market cap? 7.2 billion in market cap. They do have a dividend yield of 2.64%. So they do pay those. That is the match.com. Of course, that is, well, mtch.com. I'm sorry. Let me get that correct. That is the website. So right here, ownership, they have 250.43 million shares. 1.59 of those are closely held shares. If we come over to the capital structure, so we can see the market cap is here, the debt is here, but the cash equivalent is up here, right? So we're looking good with the cash. It's not down here. We're not stressed out. Coming down over here, we can look at the performance. So performance was rough, but as you can see from Q3 to Q4, we did start turning this thing around, right? And so when you think about all these good things that's happening with the company, you come over here and you look at earnings. And so the income statement, let me see if I can find their earnings, right? So we come over here to earnings, and we have Q2, they was 0.21% on the surprise. Q3, 7.16% on the surprise. Q4 of 2024, they were 7.52 on the surprise. So we got a company that has found the bottom, it will seem to be. When we look at the technicals, everything, this is good right over here. So like, why are we down here, right? And because we know really market sentiment, how people feel. I was looking into a little of the news. They do have a lot going on with the board. And so a lot of people have been doing some insider selling. And so that has been driving the price down. But there is nothing wrong with this company, right? Let's look at it. 858 million was the estimate. They blew it out, 864 million. The last quarter, they were projected 857. They came in 860 million. So we are not losing money in this company. But remember what we said, sometimes those other factors, right? Because if we come over and look at our news stories over here, and so we got the let's see here. We got a few things going on with the board. So we got a board fight that's going on right now. Names is 3 candidates in board fight and match.group. And so all of this is uncertainty in the company, which means that we don't know what will be going on, how will they pivot, what's happening. But as we can see, the numbers have not let us down. So just wanted to come back and kind of look at this company. Let's see where they at in relation on the 4-hour chart. Well, of course, we know everything now is in a downtrend, but when you're thinking about companies that really are based on market sentiment and how people feel, literally, once they get that board stuff going and they kind of get things back with more innovative ideas, because they are the leaders in internet dating, period. And it's not going away. It's not going away. It's only going to give more I guess more features, right? As we get ready to push AI, when they catch up, this is going to be some serious stuff. So just one that I wanted to keep on your radar, which is the MTCH ticker, because once again, we were at 179 and we are now at 28. But I do believe that there will be a time when we start to get into an uptick, because the internet is not going anywhere anytime soon. Single people are not going anywhere anytime soon. They just have to figure out what catalyst will bring things back to internet. Man, anything you got on that one?
It's interesting that rise was that, all during COVID.
Good question. Let's find out here. Let's find out. Let's go 12-month candles. Let's go here. So, and what do we have in 2020? Wow, dude, they don't even have. Dude, did you see what I'm saying?
Yeah.
Is there not a 2020 on here? Oh, there we go. There we go. Okay. Yeah. There we go. So now 2020. Yep. Ooh. Well, we went in 2020. Look at that, man. That is a nice candle right there. In 2021, we still had them, but then people were back outside. Back at that club, baby. So that's why I say they got to now find out what is going to be the catalyst, because it's been got rough ever since then. And I know people online, but look where we at. When you think about places like Facebook and all these people are doing their own, then this is really what we getting, right? So just something to put on your radar when you think about a company that is still making money, that still has good value, but the stock price is not matching what's going on under the hood. So something I always look at, man. All right, that will do it for the platform probing. What we'll do, we'll take a quick break, come back and give a few final thoughts, and we're going to get ready to land this plane, man. So we'll be right back. All right, y'all, welcome back to the Administrators Podcast. I am your host, KT.
And JoJo, baby.
Hey, got my co-host in the building, man. Look, every week, man, we are trying to come and bring y'all some good tidbits to go into the market. Work is crazy, so that's why you do see the pre-recorded. So somebody asked me the other day, well, when y'all coming back? Yeah, that's a good question. Probably after the school year, because that live is kind of hard, because you never know what Monday may bring at the end of the year when everybody is tired and almost laxed a little bit. Got to keep them on their toes, man. Yeah. Hey, man, final thoughts as we get ready to get into this market. And while you do that, I want to pull up something real quick to kind of see what we got going.
My final words are: be careful.
Woo!
Just be careful, before putting your money somewhere. I know we talk a lot about certain things. Just, again, do your research, know what you want to do, understand puts, understand calls, and just understand, it's your money. And, while some people out there may be saying certain things, again, this is not financial advice from us either, but, we're trying to educate and help, but just, be careful out there with y'all's money, y'all.
Look, And this is what I want to kind of show you. Let's get into it. So, all right, let me get ready to share this screen before we get out of here. Like Jose said, be careful because this is, let me take this off. This is our market sentiment, people. And so what we got, it's a little bit too big. All right, here we go. This is the market sentiment, people. Kind of quiet Monday. We got consumer credit. Nothing really to move unless this guy comes out and say something crazy. Tuesday, we got another Fed speaking. Wednesday, wholesale inventories, another Fed speaking. But we got the minutes from the FOMC meeting, right? And so we never know what can happen here. We do have a lot of pressure with Trump saying Jerome dropped those rates. So, yeah. But Thursday is going to definitely be one for the books because not only do we have initial jobless claims, consumer price index, year over year, the core, but we also have the China tariffs taking place and going into service. So let's see what happens. Then Friday, we have the PPI, so that's producer price index, and so both of those days, Wednesday with the FOMC, CPI and PPI, all can move the markets on those days. So always remember, take that first 15 to 30 minutes to just kind of dig in before going into the markets. The next piece, and I took the screen off, but let's look at earnings. So earnings coming up. What is this? March 31st? Oh, no, man. Well, I guess that's not the right week, huh?
Yeah, no.
Dang, that's terrible. Okay. Let me see here, man. I know we got earnings. There we go. Okay, now I got the earnings. All right, bam. So we got the earnings coming this week. Woo! Anything to catch your eye on this one, Jose?
Well, the first one that hit me was Friday. J.P. Morgan Chase
and BlackRock. So it's bank time.
Man, we're about to get it kicked off. Oh,
yeah,
man.
I think they're gonna. Man, I don't know what's about to say. I think the guidance is gonna be what rocks it for the banks, man. Let's see what they do, but I am still gonna go give you some XLF. All right, let's see what's happening here. But other than that, yeah, we got a little Delta. We'll see what's going on with that. Utilities, so Constellation brand. Yeah, but that's pretty much it. CarMax, I would like to see what they have to say going forward as we look at tariffs and American made and all these pieces. So that's pretty much it, y'all. Just trying to keep y'all abreast of what's going on for this week. I will, before we get out of here, echo the sentiments of Senor Ortiz. Be careful. As you've seen, fear and greed is at a 4. So at any given time, we could do a bounce. Not saying that it will be a long, sustained bounce because the times are just crazy. But we do know that we are at like 504, 503, somewhere up in there. 500 is a very psychological level. So the bounce could come soon to grab a little liquidity and then break under that 500 because hopefully it will be a fight. At that 500, and maybe that be the turnaround of it, but we will see. Stay on your pivot, keep those stops tight, and take this time to start building out some of those positions that you've been looking at for your favorite stocks long term. I think with nothing else, we about to get up out of here. This is KT for KT TV signing out with my co-host
JoJo, y'all.
100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV.